The Products and Markets chapter, located within IBISWorld's Industry Research Report, provides a deeper understanding of what the industry does and details on how it operates and how different factors have affected industry performance. This chapter is made up of 6 sections that look at the industry's products or services, its markets, where the industry is located, whether it has imports or exports, its supply chain, and how it differentiates itself from other industries. The supply chain section of the industry report identifies major suppliers, upstream links, and buyers, downstream links, for the industry. Our analysts choose 5 to 10 buying and selling links. Key buying industries are those that buy from the industry, while key selling industries are those that sell to the industry, also known as suppliers. This also includes business-to-business, B2B, or industries buying and selling with other industries, and business-to-consumer, B2C, such as retail, where consumers are a source of demand. Whether it's an upstream or downstream industry, each item listed has a description of the relationship between it and the industry at hand. So why is the supply chain section important? It keeps you informed regarding the key related industries that could affect a company's performance. For banks, it helps determine portfolio risks. For example, if a key buyer industry, like magazine publishing, is struggling, then its supplier, the printing industry, may struggle too. Such changes can impact the entire supply chain. And for procurement professionals, understanding the supply chain is vital for contract negotiations and helps identify other industries that may be buying from their supplier. Products and services. This section is a breakdown of the products and services that the industry provides based on current year revenue. It explains how a change in product mix has affected performance. Each subsegment is based on the industry's main activities, which can be found in the About This Industry chapter, and provides analysis of the trends and drivers affecting product or service over time. This section provides an understanding of which revenue streams are most important to companies within the industry by seeing each segment's size. For consultants and investors, its analysis on segment change allows consultants and investors to determine dying product segments in which it is unwise to invest, and growing segments, or opportunities for investment within the industry. For example, premium beer is the largest segment in the breweries industry. However, the analysis says that its share has been declining. This is most likely in favor of craft beer, which has increased in share over the 5-year period to 15%. Therefore, craft beer may be a better investment opportunity than premium beer. Additionally, business valuation firms can use the products and services section to gauge the diversity of an industry's product mix within a typical company to help with assessments. Demand determinants. This section discusses factors that affect demand for the industry's products or services. This includes factors that stimulate or reduce demand for goods or service, and external factors that can affect sales, such as buyer behaviors, international trade, pricing, substitutes, government regulation, seasonality, innovation, and many, many more. By using the demand determinant section, auditors can understand if a client has prepared for competition from other industries. For example, beer demand can be affected by substitution through spirits and wine, and cheaper imports. Major markets. This section details key markets to which the industry sells. It includes a segment chart and analysis on segment trends. The market is broken into segments based on total revenue and includes a discussion on how markets influence industry performance and changing trends over time. The major market section shows which markets are most important to companies within the industry by presenting each market size and any changes in trends. For example, the major customer segment for the glass product manufacturing industry is the building and construction market, 45%. Because it's close to half of the industry's revenue source, this is an important market to know and monitor. This helps marketing professionals who need to know changing customer mix and how it affects the industry's operators, such as online vendors replacing brick-and-mortar stores. International trade. This section explains industry trade and how it affects performance. It also provides level and trend for imports and exports, and analysis on industry trade, a trade balance chart, as well as export-import market locations chart. The level and trend for trade is based on ratios of imports divided by domestic demand, or exports over revenue. The level can be high, medium, or low. The trend is determined by the change over the current 5-year period, and can be increasing, steady, or decreasing. Products and services can be imported and exported. For example, accommodation for foreign tourists counts as an export of a service because it brings money into the country. Trade is traditionally attributed to manufacturing. Wholesaling and retail industries may direct you to an upstream report for trade figures. However, there may be industries that do not have trade at all. From this section, you can determine which countries have an advantage and how it affects the domestic market. You can also assess risk of exchange rate fluctuation, legal and political factors affecting performance, and look for potential markets through exports. Information on high or increasing imports can be used by procurement professionals to source less expensive and better quality goods overseas. The industry trade balance chart shows the relationship between imports and exports. A positive balance equals a trade surplus and more exports, while a negative balance equals a trade deficit and more imports. Additionally, the trade locations chart shows a breakdown of locations for imports and exports. Business locations. The business locations section provides a geographical spread of operations of the industry and a discussion of why certain areas are more advantageous than others for industry operators. It also includes a business locations map, operation versus population chart, and analysis. The analysis in this section details why the industry is located where it is, trends in operator locations, and the movements of those trends. The information is mostly based on establishments, but also can be spread of revenue, production, or employment. Industry spread normally correlates with the spread of population. When there's an advantage in a state or region, it is usually due to the state's natural inputs, example, mining, natural markets, example, taxis in New York, or skilled labor, example, biotech near universities. The business location section helps users to be more effective in targeting marketing campaigns and lowering transport costs by situating operations close to supply chains. Procurement teams, specifically, can use this section to secure lower prices in heavily concentrated areas. The distribution map shows the spread of establishments, revenue, or other relevant statistics by state or region. Furthermore, the industry location versus population chart shows the spread of establishments by region versus population spread. This information can also include revenue, production, or employment. Along with the United States, IBISWorld offers research on United Kingdom, Canada, Australia, China, and global industries. To get started today, visit www.ibisworld.com. Thank you.